Morning, good morning, good morning. Thank you for tuning in to the Equity Channel, where we provide the highest quality stock market analysis to individual investors. Our goal is to help you improve your returns by keeping you up to date with everything you need to know. What helps investors beat the market is information and knowledge of how to use it. We will provide you with both. Before we get started, be sure that you subscribe and turn on your notifications because every time we drop a new episode, money is made. All right, all right, all right. As usual, give me a few moments here to give me a few moments to get this shared out to all of the networks. And then we shall begin. Good morning, good morning, good morning. Good morning, good morning, good morning. What's up, Christopher? What's going on, man? We'll get to it in a few seconds. Guys. Okay, let's get to it. So yesterday we we heard some more we heard some more rhetoric, I guess you would say, coming out of the administration on tariffs, and that gave us a turnaround on the day. Ended up closing to the downside. 496.48 was the close. Pretty, pretty. Another wide range day, I guess you would say. Um, the And I'm just looking over some things here, just double checking, making sure I'm doing a few things here. Okay, good, good, good. All right. Yeah, so the pivot on the day sits at around 503.54. So you can see. Um, first point of support 482.10. First point of support 482.10. If I am not mistaken, we we probably already hit that level or very close to it in the pre-market. It's very possible that we already hit those levels in the pre-market. Um, Second point of support, 467.72. Yesterday's close was outside of the value area. Let me get rid of this. Yesterday's close was outside of the value area. As you can, we have our value area set around 45 at the moment. Right? Yesterday's close was outside of the value area to the downside. And open lower was most certainly in the cards for the day. But as you can see, we have to start questioning some of these lows right now. We have to start questioning some of these lows. Um, in particular, because we have the conditions right now that we know are relative to turnarounds or rebounds, bounces in the market, right? Um, these are things that we probably shouldn't ignore. Uh, you know, like right here we have the last time I was looking at this, we were at 486.95, right? Um, so that was already below 20 on the RSI. Let's go ahead and refresh that, right? As you can see, right, we're trading closer to 496 now, right? And I'm sorry, 493. I meant to say right here. These numbers are going to be delayed a little bit on bar chart, probably, but nonetheless, we've already broken below 20 on the RSI in the pre-market. Uh, you know these these levels here, if we're gonna see a market that's moving lower, right? We're gonna need some room to grow here. Gonna need to have some sort of momentum with it. Uh, something of a bigger nature, that really comes in and knocks the market down, regardless of these levels. There's got to be a very strong catalyst, right? It's got to be a very strong catalyst. That's not to say that the tariffs are not, but nonetheless, um, I was telling someone this the other day. You would have to expect that the market may become a little less and less and less responsive to the terminology, um, over time, right? And more responses to shifts in the policy, or more responsive to shifts in the rhetoric or the dialogue around the terminology, right? So saying tariffs alone may not be, enough to send the market into a spiral to the downside at this point. But a major shift in the tariffs, policy could be enough to do that. So we'll have to keep that in mind. But again, nonetheless, we have to start being careful near these lows. Especially those of us who take overnight trades, or who you know um, look to trade the market at the open and things of that nature. Right, we're gonna have to be more mindful. Be more mindful. All right. Now, one thing I do want to point out that should not be overlooked from yesterday, right? So again, so although we had what I would characterize as a bearish close, right? I do want to point out that this is bearish in the sense of we are looking for buyers, right? This is bearish in the sense of like we are looking for buyers. So we're good morning, Aldrin. We're trying to we're trying to push to the point of finding some level of liquidity or finding individuals willing to, willing to let go, right? And we already know, by large, there's going to be, a lot of stop outs in these areas, things of that nature that provide some liquidity to the market and give us the opportunity to continue to move. But one thing I don't want to be um, overlooked about yesterday is this. Right? Here's one thing I don't want to be overlooked as far as yesterday. Higher low, higher high. Good morning, good morning, good morning. What's up, Lulu? Right? I repeat. Higher low, higher high. That did happen yesterday. Right? Let's move on into the 1 hour charts here as the market opens. So that did happen yesterday. Right? Higher high, and then we came down to close at a low, but it was a higher low. So in this first hour here, what we're going to really be paying attention to is, do we break the lows of yesterday? That's one, right? And if so, do we find support near the 484? Now, I will go on record as saying, if you're looking for short opportunities today, take them early, and I wouldn't blame you, right? I wouldn't blame you for looking for short opportunities today. I wouldn't blame you for doing that, right? But, nonetheless, I want you to, get them out of the way early, get them out of the way early. And good morning, Shay. Good morning, good morning. So yeah, so get your shorts out of the way early. If you're gonna do it, I wouldn't blame you for looking for shorts today. If you're gonna do it, get it out of the way early. Um, but as I mentioned, I also want you to be mindful as to any move higher early in the session as well will mark a higher low here, right? So for those that are just popping in, what I was discussing, something to not ignore from yesterday, something to not ignore from yesterday is the fact that we did set a higher high from the previous day. And here we are with an opportunity to set a higher low. Again, I wouldn't blame anybody for looking for shorts today. But get them out of the way early so that way you don't spend the rest of the day wondering what you should do here. But you know, sitting where we are right now, this is prime real estate for the market to find itself, some upside as well. So if you're gonna take shorts today, uh, you know, keep your okay. Here's what I'm gonna say to you guys: keep your stop losses tight today, right? Let me let me give some suggestions here. All right. See this range right here? This range right here? Let this be your, let's call it your range of expectation, you know. So in this regard, let's say you got into a short right now, right? I would personally be out of that short by by the time the market hit like 499 ish, and look towards these equal lows here or somewhere in this area. So if you did take some shorts today, you know, be willing to get out of that of those shorts early, right? Be willing to take the very small loss today. Don't get caught up in the narrative of the moment, okay? Like don't do that to yourselves today. Don't get caught up in the narrative of the moment. If and let's go back to the 15-minute chart here, right? Um, so one good thing for you to you can wait for is to see if we break the lows in the first 15 minutes, right? And if that happens, cool, that could be your signal for your low right there. So from here, yeah, you'd say, okay. So yeah, I'd say breaking back above. So let's say you break these lows here and you take a trade. I'd say back above like 495, right? I'd be looking to get out of that thing. All right, I'd be looking to get out of it. Um, and you'd probably be looking for like 485 ish, like 480, 486 to 485 ish would probably be your target. So yeah, so at least wait to see if we break the lows of this first 15 minutes before you so that's a nice early early in the session short if you're gonna take it. All right. But like I said, don't go looking for bleeding today is what I'm saying. Right? Get yourself a quick short and get out the way if you're gonna take it. Don't go looking for bleeding today. I don't know if we're gonna see blood in the streets today. As I pointed out before, there's a lot of value in the market right now. There's a lot of value in the market right now. Okay. Um, we were already trading below 20 on the RSI in the pre-market. Okay. So as if we even approach 489-ish, you know, so even if you as you approach these lows from yesterday, even that's going to be a pretty tough level to break through. So you want to be paying attention to all of that. All right. So I'm just speaking to the people who may and probably do have shorts on their mind today. All right. If you got shorts on your mind today, I don't blame you. Yesterday's close was bearish. Yesterday's close was bearish. But the current position of the market, we're not positioned for a tremendous amount more in downside. We would need a really like something bigger needs to happen to force that more of that downside, right? Exactly. This is exactly my point, Shay. Right? So you gotta really think that the market is positioned more for upside than downside right now. So if you take shorts today, make them quick, move out the way, and I'd say likely from there, look for long positions after that. All right. Matter of fact, let's get to a few of my slides on the day, Let me show you guys a few things here. Um, so a few stats, that I want to talk about that are relative to where we are in the market right now. All right. Number one, all right. So volatility spikes can coincide with low risk buying opportunities. Right. So if they're low risk buying opportunities, what kind of a selling opportunity are they? You can ask yourself this question, right? If they're low risk buying opportunities, then what kind of a selling opportunity are they, right? Averaging the 20 biggest 3-day spikes in the VIX. So if you look back over history, the 20 biggest 3-day spikes in the VIX, the S&P 500 was usually up about 16.5% a year later, right? 16.5% a year later. Now, this is most certainly a situation where uh, the president has his, how do I put it? Um, he has his hand on the meter. He has his finger on the switch. So what eventually happens is going to be relative to a combination of what he decides in the end and how corporate America decides to deal with it. Okay? That's how this is going to be. So, for example, yesterday, Microsoft decided we're not building these factories. Remember all those factories that the president was saying, oh yeah, they're going to be building factories. They're going to be. Well, Microsoft decided yesterday that no, we're not going to do it. All right, we're not going to build those factories because that we don't quite feel like we're being given the environment where we should build these well it's not factories that well not factories, but they're building data centers. Let me rephrase that, right? We're not going to build these data centers, right? So that was a little under 1,000 new jobs that would have been created, right? On the construction side and within the data center itself, right? Just shy of 1,000 jobs. So you can see how these companies are, in essence, going to be a part of the key to understanding what happens next. Now, some may say that means that Microsoft's going to be saving money, and so in that regard, this may lighten the impact of the tariffs on Microsoft. And I would argue that is true. Um, if I were Microsoft and I were some of these other companies, I would do the same thing, right? I would actually say, okay, well, look, you know, I'd rather not be spending all of that money right now. That was like, I think it was like phew, it was I think I'm trying to remember how much it was, but it was in the tens of billions of dollars. It's in the tens of billions of dollars. Good morning, Kenneth. Right? It was in the tens of billions of dollars, right? That Microsoft was about to spend. Um, you know, I have I have a video here that we're gonna listen to in a second to help kind of understand the rhetoric and you know how people are looking at it and whatnot. Right? But we'll talk about that in a second. Let's go to the next point here. Right. So with yesterday's negative open, well over 80% of S&P 500 stocks traded at a 1-month low in the early hours. Right. So looking at forward returns following a spike in 1-month lows to more than 80%. S&P 500 stocks were higher in 14 out of 16 previous instances. right? Looking 1 year out with an average gain of 22%. Well, the impact to Microsoft, you know, is relative to what they sell abroad. That's one. Number two, if they are if they are going to build new factories and new data centers, the craziest part about that is you want them to build the data centers, but your tariffs are making it more expensive for them to build the data centers. That's your issue, right? Um, so you gotta keep that in mind, all right? But um, no, almost nobody is insulated from these tariffs, right? Almost nobody is insulated from these tariffs. Let's slide back over here for a few seconds. Look at this, right? Okay. See Microsoft? Now, I, I'll, I'm gonna take the simpler approach here, right? Yeah, even companies that. Oh, and don't forget Microsoft. Um, you know, they their product their product is um Microsoft's product is embedded into physical products, right? I'm on a Microsoft product right now. Does that make sense? Right? Um, so like look at this, but look at this right here though, right? So I could argue, one could argue that, if they were very insulated, right, that this would be this would be much less of an impact than with what we're seeing right here. For example, let's go over to Netflix. Look at Netflix. Look at Netflix since this whole thing has been going on. Netflix has barely budged. Now, Netflix is one of the most insulated. So if we want to talk insulated, this is one that my recent studies has shown is a pretty, well insulated brand from the tariffs. This is not a suggestion to go out and buy Netflix stock, but you know, um, you can see how they've been barely like they've barely even seen a you know a scratch, right, from these tariffs, right? Learn something new every day. You just learned, you know, Netflix might be able to help that portfolio out a little bit. All right. Now I'm gonna go back to something we talked about yesterday, and then we'll continue to talk from the chart perspective. One thing we talked about yesterday was this, right? Don't forget on Monday, right? The price earnings of the S&P closed at around 17. So again, these these three things you have to start to as the market moves, right? As the market moves, you have to really like uh piece things together. You gotta learn to piece things together as the market moves. All right. I will be letting you guys know, Shay, as I find them. That was one I planned on telling you guys about. Anyway. Um, Amazon. Let me see what Amazon's looking like. Let's take a look at Amazon real quick. Let me go back to the daily chart here. All right. Yeah, it's not looking so good for Amazon. You know, they're one, and so Amazon should be a good example for individuals where the thought process was, oh, well, what about the companies that sell most of what they sell in the United States or get most of their revenue from the United States? So Amazon would be one of those examples of, yeah, they get most of their revenue here in the United States. In the Magnificent Seven, no other company of the Mag Seven gets more of their revenue from the United States than Amazon. I repeat, within the Magnificent Seven, no other company gets more of their revenue from the United States than Amazon. All right. So um, look at how they're still getting hit hard. So um, made in America, sold in America is definitely not the narrative to go for. I've heard some people making that argument, right? I've heard some people making that argument. Um, but the that's definitely not the it's just not it. It's just not it. Okay. All right. Made in America, sold in America is not going to be the winning narrative. So I just wanted to make sure that was pointed out. All right. So that way we don't start falling for that narrative. And that's not a narrative that they're using on Wall Street or anything like that. Okay. That's not a narrative that they're using on Wall Street or anything like that. So it's not like analysts are preaching it, but I'm hearing it across a few spaces. All right. Aldrin, what do you? One second, guys. Um, um. So that's the thing. So tariffs are something. So that's a good question. Right. Exactly. So that's a part of it right there. Right. So tariffs are a thing that it matter of fact, hold on. I think I have something for y'all to show y'all something. Let me show y'all something real quick, right? Um, let me see if I can. I'm gonna try to get this over to my. All right. I'm gonna try to get this over to my. Let's try and get it over to my keynote for you guys, and I'll show you what we're looking at here. All right. Let me get this over here. Give me a few seconds. Let me download this. All right. Mm, save. Where do I save it? All right, download. Perfect. Okay, let's go back to my keynote. I'm liking what the keynote does for us. Gives us that ability to. Where is it at? Yep, there it is. Right there. All right, can y'all can see that, right? Y'all see that? All right. So tariffs are a thing where you don't know where the actual cost is going to pop up. All you do know is if if we do business abroad and we import in order to sell locally, right? We import in order to sell local. So they do most of their sales. They do most of their sales in the U.S. But you know, a lot of the people that are Amazon sales, that do Amazon sales are buying their products from overseas, right? A lot of people are buying their products from overseas, right? So if you're Amazon, if you're an Amazon salesperson, where do you figure you get all of your supplies from to sell on Amazon, right? Does it all come from here in the United States? So things like that you got to really think about, right? Things like that you have to really think about. When it's all said and done, you know. Um, it's just one of those things. And Aldrin, on the note of what you mentioned about China, um, uh, there was um, there was somebody that said recently, "Oh, we don't need China." I was trying to figure out where they got that information from. That was news to me. I'm sorry about that. I had to um get my Excel locked in. Nope. All right. Does my audio sound different, guys? Does my audio sound different? You can't have a world that's divided. That's just never gonna work really well. Um, but here's one thing. As we spoke about earlier, you know, if we can see, and this is why I said if you were taking shorts this morning, what I say, if you're taking shorts this morning, um, you know, keep those stop losses tight, right? Keep those stops tight and be willing to get out of there. Keep the stops tight and be willing to get out of there. That's why I said that right there. Because you know, wait 1 second here. All right. Yeah, just making sure my mic was still I switched from the headphones to the laptop's microphone for a little bit. Gonna let my sets charge up. Now, as we talked about earlier, we're definitely in a market that's more, more fit for a bounce. But you could still be looking for short opportunities, right? Short opportunities, but just knowing that, the you know the the market itself is in a position that's, this is prime real estate for a bounce right here. This is prime real estate for a bounce. All right, so you just want to keep that in mind. All right, look at how quickly we got to, being up 1.4% here, 0.6% here. All right, VIX is back down 2 points. All right, we only have, what, I think that puts us at 15 S&P 500 companies that are still above their 50-day moving average. Right? Yeah, crazy, man. I'm sorry, no, 25. I meant to say 25 S&P 500 companies still above their 20-day moving average right now. All right. But here's what this looks like on the future side. Just wanted to show you guys this. This is what it looks like on the future side of things. Um, Already broken well above the 50-day moving average and heading towards yesterday's highs. And heading towards yesterday's highs. All right. So that's what that looks like there. Actually, no, we've already broken yesterday's highs. We're headed for the early morning highs, is what we're heading for right now. All right. I remember yesterday, a lot of people were asking, "What's up with the bounce? Why is the bounce happening?" And um, you know, all of the reasons that you can think of will work, right? But I think the underlying and overarching reason is because there's just a lot of value in the market. Now, remember, the president still controls how this day ends. All right. But for now, like I said, on the future side, we're already well above the 50-day moving average on the Dow. Let's check the S&P. Yes. NASDAQ, we've already broken the highs of the early morning session. All right. So yeah, we'll see how the day works itself out. We'll see. You know, now as for crude oil, um, I am going to be making my decision towards the end of the day, what that position is going to look like. And let me go to my list. Let me get to my list real quick. Well, let me get to my list. And I got trades for Anisha, Aldrin, and Emoji. So I'm gonna let y'all in on this crude oil trade, on this oil trade. So look out for them messages to slide through. All right. Uh, if you want your opportunity to catch you one of these trades,
Just pop into one of our Telegram sessions. Yeah, I said Anisha. You don't want the trade? You don't want the trade? I don't think she wants it, Aldrin. I think she's, you want to forfeit the trade. uh, goodness, goodness, goodness. Um, most definitely, Anisha. Yeah, I don't know if we've had a loss on one of these special trades yet. I don't know if we've had a loss on one of these special trades. We're gonna have to come up with a different name for these instead of special trade. All right. We're gonna have to come up with a name for one of these. For these, we can't keep calling them special trades. That just sounds so whack, right? Y'all don't think that sounds whack? Special trade. That sounds like something Trump would say. Very special. It's very special. We've never seen anything like it. You know. Yeah, we gotta think of another name. We can't keep calling them special trades. Any ideas, guys? Any ideas? Hit me with something. Hit me with something. Hit me with one or two of them things. Few ideas. All right. Now, so yeah, so keep we'll keep our eyes peeled open here. I remember 503 was the pivot, right? 503 was the pivot. So we just hit the pivot on the day. Exclusives? Yeah, we gonna call them, I like that, Shay. We're gonna call them exclusives. Exclusives. All right. Let's go with exclusive. Yeah, that's that. Yeah, we're gonna go with exclusive. Um All right, let's see here. Let me I gotta go to my get to my mobile dashboard. All right, excellent, excellent, excellent. Okay. And the messages seem to be coming through pretty basically we seem to be able to how do I put it? Let's see here. All right, sorry about that. I was in the middle of banning people. So we went up to the monthly pivot. Not the monthly, I meant the daily pivot. All right. Um Went up to the daily pivot here. Give me a second. Let me see here. Mhm. All right, today is the 9th. Let's bring our pivot points back here. So remember, this is what we're dealing with. So 504.64. All right, 504.64. All right. So we went up, we hit our pivot. This could be one of your short opportunities right here potentially. All right, maybe we're headed back to the lows of the day. Who knows? We'll see. Um, we will see. But at some point, at some point, we're gonna have to let go of those short ideas and get with the program. You know, because I know some folks are still out there looking for their short opportunities today. Don't lie to me. I know y'all doing it. So maybe this will be, but again, if you're taking shorts today, I'm gonna repeat this one more time. If you're taking shorts today, keep them brief and keep them stops tight. Okay? If you're taking shorts today, keep them brief and keep those shorts tight. I don't think it's over with, right? However, so let's remember something, right? Let's remember one thing. Yesterday, Trump put 104% tariffs on China, and then um, after that, China retaliated with an 84% tariff back on the United States. Right? Exactly. Yet and still, the market is trying to find ways to recover today. The greater point that I'm making here is we need some room. We need some room. We don't have enough room here, right? We're trying to right. We're trying to like we're basically trying to find shorts in these environments where we've got it would be unprecedented for us to think that we could short forever. You know what I'm saying? Um, he didn't say anything of the sort yesterday. You know, and you were still trying to find some moves to the upside, right? So I think all we need is some moves higher, right? So that way we could offload some more inventory. Let me put it like that, right? Look at where all your volume is at, right? All your volume right here in the center, all right? Um, you you fell out of your value area to the to the downside. You you gotta move lower, right? But you barely, and I mean barely, open lower this morning. Yeah, you gotta keep stacking. You gotta keep stacking. Look, the other thing I'm gonna point out, right? The other thing I'm gonna point out, you also gotta space out how you take advantage of the opportunities. Space it out. So remember what we talked about, right? Let's go over here. Right, remember what we talked about over here. Let's go back to the weekly chart here. All right. So it was cool. We took advantage of some opportunities here, but now we need to drop below these areas here before we start to right, exactly, right. So you wanna see the market, you wanna see the market down here before you really, take that as another big buying opportunity. And we talked about this. So what do we say if the market doesn't approach this area? Then that supports the narrative that we're currently talking about, right? That supports the narrative that we're currently talking about, the uh, where the market is looking to take advantage of some of this value for right now. Right now, when I look from the weekly perspective, look at where we are. Right, look at where we are from the weekly perspective. When you take a look at the value area, I'm saying, right? You understand what I'm saying? Look at it. So look at how the volume is thinned out. The lower you went, the thinner the volume got. Right? So these are signs that we may go and revisit the point of control, or at least the value area itself. Right? So 54 to 5700 is very possible. It's very possible in the in the in the medium term. All right? But you see where our high target was set at, right? So high target here, buying opportunity was here. So we waited this out. Boom, we catch a hit. We can buy a little bit here and here. Let's read through this right here, because look what they said, right? What was I just talking about? What was I just talking about? Right? So the bear can wait. Wall Street starts green as bargain shoppers emerge. Okay? See that? U.S. stocks sputtered into positive territory on Wednesday as investors weighed on the ongoing trade drama with gnawing suspicion that the week-long sell-off could be overplayed. Keywords, overplayed. All right? That's the kind of stuff we're looking at. That's what we're talking about right now. Have we overplayed it? Right now, it took about 10 minutes for the three major U.S. equity indexes to decide on a direction up, with rebounding tech shares, including robust Magnificent Seven rally, putting the Nasdaq out front. All right. Now, growth is holding sway over value, and the FANG group of tech adjacent momentum stocks is jumping greater than 2%. In the latest rebound of U.S. President Donald Trump's market rattling global trade war, Beijing punched back hard, slapping an 84% duty on American goods, a 50 percentage point hike from the previous announced 34% since last Wednesday's close, when Trump held his Liberation Day tariff unveiling in a White House ceremony. The SP 500 has lunged 12.1% as Tuesday's close, which dragged the bellwether index 18.9% below its February 19th record closing high, closing 20% below the February 19th level. Right? Let me see something here. Let's see here. Give me one second here. Let me Let me see something. I think it was warning signs. All right. February 5th. February 5th. All right. February 5th. This is what we do. All right. Let's go back over here. All right. Closing 20% below the February 19th level would confirm the index has been in a bear market since then. All right. So February 5th, we talk about these potential warning signs. By February 19th, you guys see what's up. Now, I will be bringing more podcasts, guys. But I'm gonna first set this live stream schedule, and then we'll start working around that. Okay. So I'm probably gonna start like releasing a brief in the early morning. I release a brief in the early morning that we can talk about on the rundown, and and go from there. All right. So yeah, man. Just get ready. We got some things coming. All right. Now, Minneapolis Fed President Neil Kashkari said the tariffs kerfuffle threatens to unanchor inflation expectations. Right. The hurdle to change the federal funds rate one way or the other has increased due to tariffs. Right? As recent weeks have reminded us, nothing is certain, and no monetary policy response, up or down, should be completely off the tape. All right. We're gonna have Fed minutes later today. Remember that. And we're gonna have Fed minutes later on today. So we'll keep that in the back of our minds. All right. So yes, no, we don't think it's over. We don't think it's over. Right. But unless we approach these levels, we should assume. Yes, I said assume. All right. Unless we approach these levels, we should assume that the market is preparing for an upside move. Okay. I would sooner wait for this level to be hit than to try to short this market right now. Something big can bring us down here, but I'm not going to propose to be the person that can predict when that's going to happen. We understand that? Yeah, something big can bring us down here right now, but I am not going to propose to be the person who could predict when that's going to happen. Right? So, for now, if you're taking short positions, keep them short in duration. That's all I'm saying. For now, if you're taking short positions, keep them short in duration. Make sure that you're in and out of there, in and out of there, in and out of there. All right? If you want to take some long positions, you know, those are the positions that you can put some time on. Right? And that's how I usually work anyway, right? So in the short term, things are bearish. In the longer term, right, as we discussed earlier, in the longer term, right, 14 out of 16 times, right, the market was higher after events like this. All right. And usually those aren't the types of usually those aren't the types of quotes that you would get from me. But that's because usually when those quotes are broken out, it's just, the timing is off. The timing is off. But I think this was the perfect time for those quotes to start being used. Why? Because people are panicking, right? Because people are panicking and they're making decisions that you know that they wouldn't otherwise make. All right. So don't fall into the camp of individuals that are doing too much right now. Right. Keep yourself grounded. Keep yourself rooted in what you need to do. Which is take advantage of these opportunities. Um, I agree with who was that yesterday? Who was that? Man, I can't remember who it was. It might have been was it Goldman Sachs CEO? I'm trying to remember who it was, man. But either way, uh, you know, he said he said you know the this is more of a buying opportunity than anything right now. But he still wouldn't rule out another 20% drop, right? And I'm like he's actually 100% right, but the second part wasn't needed right now, right? That second part wouldn't rule out another 20% drop. That wasn't actually needed right now. This is a buying opportunity. And I wouldn't rule out another 20% drop. I agree with him. However, however, a 20% drop from here without any bit of a retracement to come ahead of that, we might as well start looking for the apocalypse, right? That's really unlikely. It's really unlikely. Is it impossible? No, but it is unlikely. I'll go on record as saying that. I I would assign about an 80% probability that if there is another 20% to go to the downside, I would assign a probability that we would see at least let's see here. Let's go with a at least a 10% move higher before that 20% came. Right? I would assign an 80% probability to that. Um, but 20% from here, Donald Trump must have really dug in and done the worst, you know. Um, yeah, 1 second. 1 second. All right. So yeah, we'll see. We'll see, how this stuff pans out. Let's go back to the 15-minute here. So we were saying that this could have been one short opportunity for you here. Looks like it's still, it would still be intact, but see that? Look at this. Look at this. All right. Like you barely got any room for a move here. So like uh see these sharp moves here? They give you more, they give you more edge, But but yeah, we were talking about this one right here off of this as being a potential short opportunity. Looks like it still could be. Looks like it's still, at the moment it's still working out. But again, as we said, be willing to take the small loss, be willing to walk away, because that trajectory could change could change quickly. But for now, hey, now this is looking because we went up and hit the daily pivot, right? And so now we got some potential downside here. Remember the S1 is around 482. You got this key level here at around 484 to look out for as well. Right? So yeah, but for me, I'm gonna keep my buys locked in. And by the way, you see how flat this 50-day moving average is as well? Yeah, most definitely, Anisha. So I'll explain to you guys where the worst would probably come in. Where the worst would probably come in. The worst would probably come in where this entire situation just lasts longer than it needs to. Right? The worst would come in where the situation lasts longer than it needs to. Okay? That's where the worst would come in. So, you know, in reality, we need to get this resolved and quickly. All right. Matter of fact, let's I'm gonna play a video for you guys real quick. It's from April 7th. It's from a few days ago. All right. I think my audio is turned up enough here. Let me just go ahead and all right. All right. So let's take a quick listen to this. In specific, there's a young lady that's going to speak towards the end, and I want you guys to pay close attention to what she has to say as well. But let's dial into this first. Let's first we're going to listen to this guy. We're going to pause. I'm going to talk a little bit about it, and then there's going to be a second section there. You're going to hear a young lady speaking at the end. We're going to talk a little bit about what she has to say as well. All right, here we go.
Volatility and whiplash on Wall Street amid deepening economic uncertainty and growing global anxiety.
Yeah, U.S. markets opened deep in the red once again following Donald Trump's escalating trade war, but they have been fluctuating wildly for the past several hours. Here's a look at where things stand right now. The Dow down about 700 points or so. We actually saw it briefly in the green, up about 800 points at one point today. That was because of an unfounded rumor, but now obviously solidly in the red. And it's been red arrows all day for European stocks as well after Asian markets closed down sharply earlier. But the president is showing no signs of retreating, urging Americans not to be, quote, weak or stupid and panic.
And he's now threatening to impose new 50% tariffs on China following Beijing's retaliatory tariffs last week. The White House, meantime, is downplaying the growing economic concerns.
The market will find a bottom. It will be soon. And from there, we're going to have a bullish boom
There doesn't have to be a recession. Who knows how the market is going to react in a day, in a week.
You need to reset the power of the United States of America and reset it against all our allies and our enemies alike.
It's a strategy to create a golden age in America for the American worker. That's his strategy.
A strategy with no details. All these advisors seem to be talking past each other.
Look at his
CNN,
face.
Richard
His head
Quest,
buried in his hands, literally.
and it's only Monday.
There doesn't have to be a recession, says the US Treasury Secretary. He's right. There doesn't have to be a recession. The only problem is economic circumstances have now been put in place that most Wall Street economists of senior note say are likely to cause a recession. Goldman and others now say it's up to 60%. By the way, can we go back to the Dow Jones actual chart of the day, please? Just go back to that moment. Now, you see that green spike? That is where there was a rumor that the administration was going to pause by 90 days the tariffs. Well, it was just a rumor, and the market found it was a rumor and then promptly turned in the absolute opposite direction. But now let's forget rumors. Now we have a fact. Donald Trump says he's going to increase by 50% the tariffs on China tomorrow because they've had the temerity to retaliate with the 34% tit for tat that they did. So you want a trade war? This is what it looks like. And you remember Scott Bessent's words, there doesn't have to be a recession. By the way, all the rest, Howard Lutnick's comments, the economic advisor's comments, Navarro's comments, that's all just hyperbole. That's all just basically, it's going to be great, it's going to be marvelous, it's going to be fantastic, it's going to be wonderful, it's going to boom, but this is the reality. And at some point, ladies and gentlemen, at some point, there is so much disruption that the market simply can't take it. And jobs go, investment stops, the recession happens.
Let's not forget, Richard, that this is an administration that inherited a rather robust economy where we were seeing inflation continue to go down, though not fast enough. We got a strong jobs report. Obviously, that is backward looking. But to have administration officials, specifically Stephen Miller, go out on the airwaves this weekend and justify these tariffs as a need for a global reset because this administration inherited a recession or near depression is outright fabrication.
No, it's lies. Simple. Let's just call it what it is. It's lies. It's not true. The economy that Joe Biden handed over to Donald Trump was in fine fettle. Interest rates were coming down, not as fast as they'd like. Unemployment was low. Growth was medium to strong. Trend growth. The market was at record highs. It's quite simple. These are facts you cannot ignore. These policies. And it's not just, by the way, the policy of this tariff trade, which is by far the worst. The immigration policy has now given cause for concern about inflation because workers won't be available. Companies are putting off decisions because they simply don't know the circumstance under which they will make. Now, is Donald Trump right in his policy prescription? Let's just, for the purpose of just my answer, let's assume it's a leap of faith. You have to say it is a leap of faith that he is right vis-a-vis all the conventional wisdom that says this is going to be bad for the growth. Now, if I tell you don't drive with blinkers on or don't drive with something over your eyes, you'd probably say it's not a good idea. But somebody says try it, you take your choice.
A leap of faith based on one man's convictions, right? Which he's held for decades.
But hang on. He held these convictions back in the 1980s. The global schemes and the global trading environment is very different to today than it was then. And it's not the policy that's wrong. You can even Ngozi at the WTO says that the US has legitimate concerns. It's the manufacture of the execution that's the difficulty. And the deeper this goes, the harder it's going to be to repair the damage. Simple as that.
No doubt. Richard Quest, thank you so
Thank
much.
you, Richard.
And just take a taste of what these
Okay, so let's start with that part first, right? Let's start with that part first. So basically, you're as he mentioned, right? So let's go back over here. Go back over here. All right. Back over here. Okay. Let's go to the weekly actually. Okay, there we go. So here's the point of what this guy is saying, right? You've already done this to the market, okay? But this does not have to happen. All right, let's take it down to 4,500 here. Let's see what that looks like. Yeah, it's right about there, right? But this doesn't have to happen. Matter of fact, let's look at these previous lows right here. All right, this does not have to happen. It's a longer run issue. It's a longer run issue, Anisha. So that's what he's saying. That's what everybody's saying. That's what I'm saying. It's a longer run issue. We can still fix this. We can still fix this. Right now we can. Right now. Okay? But if there's no attempt to fix this, and what I've gathered, here's what I've gathered, right? I've gathered that right now our president likes the attention. Right? Got you. EU with retaliatory. So I want everybody to pay attention to how that shakes out and works out today. Right? I've gathered that our president likes the attention. So he wants to be seen talking about these things as much as he can. And again, this goes back to he just doesn't care, right? I don't want that to be stretched into a point of me saying he doesn't want to help, because I've already discussed that with you guys. Do I believe he thinks he's doing something good? Yes. Yes, I believe he thinks he's doing something good. Doesn't change the facts. Doesn't change the fact that he's not. Right? As right now, he's not. What the end result could be could pan out to be something that works out. But you got to be fixing it right now. Like, I'll give you a prime example. And like I said, so like, from what I've seen, they're trying to get all this stuff done. Our president is focused on breaking records right now. The fastest to do this, the quickest to do that, the most executive orders ever signed on a single day on inauguration. It's all narratives for this guy. that he wants to be able to to claim when he's gone. That's what it seems like to me. Now, here's the deal. This should have been done in a slower way. They should have taken the long route to get here. Take yourself to China, sit down with these people, talk to them, tell them what you plan on doing. You say, hey, I'm thinking about doing this because of this reason. I mean, what can we do to prevent having to go there? The biggest problem in this whole situation, see what I just said? What can we do to prevent having to go there? The biggest problem in this whole situation is that our president didn't think this was going there. We all know what going there means, right? When you say somebody went there with you, when you say somebody took it there with you, we know what that means, right? We had a president that did not think that this was taking it there. He didn't think this was going there. This is going there. This is going there. This is taking it there. Why do you think they call it a trade war? This is how we enact war. Exactly, the bigger buttons, right? I wish I had this other video for you guys that I want to show you. I think I'm gonna go ahead and put it on Instagram. I'll try to explain it the best way that I can. I have a video prepared to post over to my Instagram later on today. Right? Later on today, I plan on posting a video to my Instagram, and right, all the cards. They have no cards. All right. Apparently they did because the European Union stepped up and gave them a full deck. Right? But here's the thing, right? Here's the thing that I really want to point out and get at, right? Here's the thing. So the claims that were made as to the reasons we did this were already all false claims. They were already all false claims. We're taking advantage of people. I mean, people are taking advantage of us, and so on and so forth. And there are people in this country that want to believe that so badly. Matter of fact, I got 2 videos I'm going to be posting to Instagram later. I have to be a part of the group of individuals that's letting the truth be known. So, a factory worker from China was having a conversation about it. He said, "Okay, maybe we did have higher tariffs than the United States had on us, but the premise that the U.S. is being taken advantage of, and where's the benefit?" And this is something that I kept trying to explain it, but this guy gave us some insight, and I'm going to share that insight with you guys today. He said, listen, they make a pair of sneakers. They make a pair of sneakers. I think he said the factory gets $3, if I'm not mistaken. $3. Right? Matter of fact, let me see. I think I can play the audio for you guys. Let me just play the audio. You'll get the video later, but let me see if I can play the audio right now. Okay, and y'all can let me know if y'all can hear it. Let me see if I can play this audio for y'all real quick. 1 second. Let's see. Yesterday, where we at from yesterday? What I got? I'm gonna play the audio for you guys. Okay, here, all right, here it goes. Y'all ready? Look.
A Chinese factory made for a pair of Nike shoes, $10, which sells 150 on the shop. A Stanley Cup, $50. The factory.
I'm gonna start it over.
Do you know how much a Chinese factory made for a pair of Nike shoes? $10, which sells 150 on the shop. A Stanley Cup, $50. The factory gets $1. $1. But when they sell millions of them, that's millions of dollars. And all surplus. That's where the surplus comes from. But for every $1 the factory made, somebody in America is making $49. Who is benefit from the globalization? And think about the pollution factory has to cause in the local area.
Okay? All right? Okay? This is what I've been trying to explain. This is what I've been trying to explain. None of this makes any sense. You want a trade surplus with people that we are already getting the most from. You want a trade surplus with people that we're already getting the most from. I told you from day one, I kept trying to tell you guys, this is how it works. China makes it cheap. Germany makes it quality. The U.S. is... What are we talking about? If you had that relationship, somebody tell me, if you had that relationship, would you want to ruin it? If you were running a business, and you can get your product made for $10 and sell it for $150, would you want to ruin that relationship? If you can get your product made for $1 and sell it for 50, would you want to ruin that relationship? What are we doing? What is going on here? If you want to understand why from day one I kept trying to speak down on these attempts to change what's going on in the world, this is why I kept trying to say we are already on top. I don't even think he's being told that, Anisha. I think in his inner circle, nobody's saying to him, well, Trump, look at the numbers. I don't even think so. You saw the video I played for you a second ago. What are all of those guys saying? That's why I paused it right there. What are they all saying? This is going to be great. It's awesome. Let it play out. Yada, 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 blah, blah, blah. The 10-year treasury is going up now. Let's talk about that, shall we? Let's talk about that. Do you guys remember a few weeks ago when I said Navarro, the guy that's his advisor, said that their goal was to attack the long end of the curve and force down the long end of the curve and lower the 10-year treasury. Remember? I laughed at that. Y'all remember that? Because you don't control that. You don't control. What made you think you could do that? The only way to control the long end of the curve, I told you guys this from day one, is to actually buy. You have to actually buy those assets, which would defeat the purpose of trying to save money, right? Let's talk about this. Let's talk about it. U.S. Treasury yields spike as midnight strikes on tariffs. Your tariffs are having the opposite effect. Your tariffs are having the opposite effect. Right? Look at this. April 6th. What day was Liberation Day, guys? What day was Liberation Day? Was that April 2nd, right? April 2nd? Somebody let me know. Was it April 2nd? Well, look what the market's been doing since April 6th. This is your treasury yield. This is your treasury yield. Look at that run up right into Jesus. What did you think? You thought it's ridiculous to think this, and that's why I said, yo, Scott Bessent, you are the Treasury Secretary, sir. You are the Treasury Secretary. It is your job to know all the things that could impact borrowing costs for Americans and for the United States. That's a part of your job. You should have known better, bro. I was ashamed. I was ashamed. I was ashamed. I was ashamed listening to that guy. Scott Bessent, they don't have to tell him. He knows better already, Anisha. He knows. Trust me, he knows. Um, he is a hedge fund manager, right? He was a hedge fund manager. He was a hedge fund manager. He knows. Oh, Trump. But that's not Trump's job. That's not Trump's job. You understand what I'm saying? That's not Trump's job. Scott Bessent, you're a hedge fund manager. You knew dang well Scott Bessent, you knew dang well there was no way you guys could control the long end of the curve this way. If you used to work at a hedge fund, that means you've been in environments that have, you know, that have involved needing to understand the 10-year treasury. Unless you were the worst hedge fund manager on the planet. That's possible. Let me play the rest of this video for you guys real quick. I want you guys to listen to the young lady. She's gonna talk about the double talk. She's gonna speak on the double talk that's coming out of the White House. And he talked a little bit about it as well. But listen to the young lady. I think she's wearing white. I think she's wearing white. Listen to her. All right. Let me play this real quick. Let me finish playing this part.
Richard Quest, thank you so much.
Thank you, Richard.
And just take a taste of what these White House and cabinet officials said on the Sunday shows and today, trying to defend what Trump is trying to do and trying to explain what he's trying to do.
I've seen some deals that are great, and President Trump is going to decide if they're great enough.
Listen, we've got 50 countries that are burning the phone lines into the White House up, and probably the president's cell phone as well.
There is no postponing. They are definitely going to stay in place for days and weeks.
So when you say to me, Ed, what do we want from them? We want fairness.
I mean, at the end of the day, the overriding...
I'm sorry, I gotta pause again. We want fairness. After I played that that audio for you guys about what the Chinese factories get to create our products, doesn't that sound even more crazy to y'all now? We want fairness? How crazy does that sound? We want fairness. That's nuts. That's nuts to say we want fairness. This is Navarro, by the way. This is Navarro. This is the guy, right? This is the guy that worked, this is the guy that wrote that book and that report on tariffs and used and quoted himself using a fake name. He gave his source a fake name, and the fake name was really his name. The fake name was really his name, an anagram of his name. This is him right here. And by the way, this is Trump's. Y'all ready for this? This is Trump's trade advisor, meaning he's the guy responsible for most of what's going on right now. He's the guy in Trump's ear saying, you gotta tariff our way out of this thing. And y'all know I don't really speak like that, okay? That's what they're saying. Trump said, you tariff us and we'll tariff you. That English doesn't even make any sense. Okay? It's crazy. All right, let me finish playing it now.
From them. We want fairness.
I mean, at the end of the day, the overriding theme is just trust Trump.
Yes, though I will say we are starting to see a little bit of a division even among Trump officials. Obviously, there's nobody that speaks for the Trump administration that is going to outright criticize the president's overall strategy here. But I think in addition to the officials that are saying, look, you got to trust that he knows what he's doing. We have to give this time. This is ultimately going to end up in a good place in the medium to long term. We're seeing an emphasis on the countries that are wanting to negotiate. Essentially, officials that are coming out and saying it's not the worst idea. If you're interested in negotiating, the time is now. I think those are two distinctly different views. You talked about two camps existing in the Trump world. There's the idea that what Trump is doing right now is going to eventually course correct on its own. And then there's a separate idea that these negotiations need to happen in order for that to happen. I'm not sure exactly where President Trump falls right now. I don't think that most people know, and that's obviously the key thing. And I think it's also why we should be watching Netanyahu's visit to the White House really closely. Does he come out of there having effectively negotiated and gotten himself a better deal?
Yeah, because that's the thing. It's not just two camps existing in Trump world. Trump has
This lady right here. Listen to everything that she's saying. Listen to her very carefully. Listen to her.
That's the thing. It's not just two camps existing in Trump world. Trump has said both things in different social media posts. You know, he'll say these tariffs are here to stay. We're going to reconfigure the U.S. economy. We're going to bring more manufacturing domestically. This is about a complete reset. But then in a different post, he'll say, look at all these countries coming to negotiate. My plan is working. So I think that's where the business leaders are saying, well, what can we trust when we don't quite know the plan, because it can't necessarily be both things. Are these tariffs a negotiating tool, which means they may be temporary and there will be pain, but it could pay off in the long term, or are these tariffs about moving manufacturing into the U.S., which will be a long-term problem for a lot of these business leaders, and they don't necessarily want to hear that. I also think saying both allows some of these Republican leaders, it buys them time because they can say, hey, this is just a negotiating tool. We're going to wait it out.
I've talked to a lot of those business executives, some of whom are in touch directly with the White House about what this is going to look like. And they're saying, hey, we would rather pay or pass on to consumers $20 million in tariffs than spend $5 billion to build a new factory in a country with whom we don't know what relations are going to look like in the next administration or under the next party's leadership. And they are very frustrated because during Trump's first term, where he was primarily targeting China, a lot of them moved their factories to Vietnam. And they're saying, hey, wait a second, we did this for you in 2019, and now Vietnam's getting hit with the 46% tariff. What are we supposed to do? We're just going to ride this out.
And, meantime, there's the optics of all this, right? Trump is always concerned about how he's viewed in the media and the like. And the message that they wanted to send, this was a decision by Trump and his team, is to tell folks about his golf game this weekend.
How was the golf tournament? Very good, because I won.
Of course, we're not going to listen to Trump talk about golfing. But you should see this guy's golf swing. It's absolutely terrible. I'm not joking. I don't know if this is the one where they actually showed him swinging. No, this ain't the one. But if he won, it's because they let him win. That's all I'm gonna say on that note. All right. This guy was definitely hitting golf balls into the lake. That's a fact. All right. Now, Uh, you heard what the young lady said, right? Right, because I won, right? I'm going to talk about two things here, right? I'm going to talk about two things here. First things first. Um, the young lady who spoke, the one that I was talking about, the one in white. All right. So check this out, right? Check this out. Think about what she just said. These tariffs cannot be in place for both reasons. Y'all understand that, right? It's impossible for them to be in place for both reasons. Which one is it going to be? Are they just here for negotiation, or is it your goal to actually bring manufacturing back to the United States? Now, which did he claim? He claimed that it was to bring manufacturing back to the United States during his run for president. Then, towards the end, and as he starts heading into the White House, and it was right after he started to get pushback on it and stuff like that. All of a sudden, they're a tool for negotiations. Then, let's make it clear. Then, when the negotiations begin, you don't even want the negotiations, or you break your word on the negotiations, like you did with Canada and Mexico. Right? Um, Anisha just said that the European Union uh, 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 post retaliatory tariffs, right? Um, Let me see here. Let me see if I can find it here. Right here it is, right here. Right? Okay, y'all see that? Y'all see that? Okay, you see it. So Trump says the EU must buy $350 billion of U.S. energy to get tariff relief. He said a zero for zero tariff is not enough. Like what? Like what is going on here? You said they were going to be reciprocal. Like there's a lot of double talk going on. I don't think this guy has a real plan that he can articulate. Maybe he knows what he wants somehow, some way, but I don't think he has something that he can actually articulate. If zero for zero tariffs, if you tariff us, we'll tariff you. I'm using his words. Please forgive me for speaking broken English. If you tariff us, we'll tariff you. These are his words. So they say, okay, so we won't tariff you. You say, oh, it's not enough that you won't tariff us. You have to also buy $350 billion of our energy. What? You can see how this is looking really weird. It's looking really weird. It's just strange behavior. I don't want a president who leans towards weirdo behavior. I really don't. It's absolutely ridiculous. You know. But yeah, so the European Union will have to commit to $350 billion of American energy to get a reprieve of Donald Trump's sweeping tariffs. The U.S. president said late Monday, dismissing Brussels' offer of zero for zero tariffs on cars and industrial goods. Now, if you remember, I posted another video yesterday, and I'm going to play that one for you guys right now. I want you guys to hear this. We've put tariffs. We've put tariffs on countries that didn't even have tariffs on the United States. I repeat, it was supposed to be reciprocal, but because they didn't actually look at the tariffs, and by the way, not looking at things, not actually looking at things is starting to become a habit of the administration, right? They didn't actually look at people's performance before they fired them. They didn't actually look at what was going on at some of these administrative departments before they started dismantling them. And they didn't actually look at whether or not these countries were charging us tariffs and how much they were charging us before they put reciprocal tariffs on them. Listen to this. Let me know, and y'all can let me know if y'all can hear this. Now is not reform. It is rejecting the very system it created. The US has imposed a blanket 10% tariff on imports for nearly all countries. On top of that, it has layered on higher tariffs, up to 50% for selected countries, especially those that run a trade surplus with the US. According to the administration, the sweeping tariffs are needed to fix America's trade imbalances. But there is nothing inherently wrong about running a trade deficit. It simply means that American consumers are buying more from the world than the world is buying from America. Moreover, the focus has been solely on the goods trade. That only gives a partial picture. In fact, the US runs a surplus with many of its trading partners in services, exporting software services, education, entertainment, financial and business services. But this fact has been completely ignored. In Singapore's case, we have an FTA with America. We impose zero tariffs on US imports, and we actually run a trade deficit with the US, meaning we buy more from them than they do from us. If the tariffs were truly reciprocal, and if they were meant to target only those with trade surpluses, then the tariff for Singapore should be zero. But still, we are being subjected to the 10% tariff. We are very disappointed by the US move, especially considering the deep and long-standing friendship between our two countries. These are not actions one does to a friend. Could y'all hear all that? Did y'all hear that? So, not only did you put tariffs on a country that didn't have tariffs on us, but you also put tariffs on a country. You also put tariffs on a country that actually bought more from us than we bought from them. Is that not what you wanted? Is that not what you wanted? Isn't that ideal? That you already run a surplus with this country and you still gave them 10% tariffs. Why? Because you didn't even bother to look. You did not even bother to look. These guys are not researching, they're just acting. And and by the way, that's a double entendre. They're acting as in taking action, and they're acting as in doing a lot of pretending. Doing a whole lot of pretending. Crazy that we're going through this right now, and we don't have to. Now, nonetheless, let's come back over here. I still want you guys to pay attention to what ends up happening today. You guys to pay attention to what ends up happening today. Because what did we talk about earlier? Right? We said we want to be mindful of the position that we're currently in, nonetheless. Be mindful of the position that we're in, nonetheless. All right? A VIX over 50. A SPY below 30 on the RSI. Earlier in the day, we broke 20. All right? So I want you guys to pay attention to how the market moves, despite the fact that the European Union put those tariffs on. And this becomes a point. This becomes a point that when it's all said and done, value will always matter in the market. It will always matter. We're gonna need to see what these companies are saying on their earnings reports. We're gonna need to see what impact this whole thing has to growth. Right? So we still have a lot to to weed through. But always remember to pay attention to value no matter what's going on. On February 5th, when I issued that warning for the S&P 500 or for the market, right? Valuations played a big role in that. Valuations played a big role. We have to continue to operate as usual when these types of things happen. Right? We have to continue to operate as usual when these types of things happen. You don't let the market change who you are. You don't let the market change what you do. Right? Who you are and what you do should already be something that has been formed to handle all markets. These are things you guys are going to learn more and more and more. The longer you spend in this market, the more time you spend as a trader, as an investor, right? The more time you spend as a trader and as an investor, you start to realize that the market actually, in fact, doesn't change as much as people claim it does. What happens is it goes from one state to the next, and you, as a trader or as an investor, it's your responsibility to know how to operate in every type of state. That's your responsibility, right? That's your job. But your goal as a trader or an investor should be to get to that you. Get to that get to the point where that person you're looking in the mirror every day is the person that can handle all this. That's got to be the goal. All right? I'm on here every day. Every day. You guys, you know, no matter what's happening. If the market's up, if the market's down, if the market's sideways, if the market's panicking, if the market's greed, in a state of greed, irrational exuberance, every single type of market, if you've been around me, you've seen me in it. You've seen me in it. Point out one thing that you've seen change about me in the midst of these different markets. You realize I don't change. The things that I will do in each state of the market are things that I can tell you that I was going to do before those states actually came about, before they actually existed. And when it happens, I do exactly what I told you I was going to do. Do I not? Every time. Every time I tell you what I'm going to do before I do it. And nothing changes my mind on that. Not because I'm stubborn, stuck in my ways, or anything of that nature, but because I know who I am in this market. You got to get to the point where you understand who you are in this market, and that shouldn't be something that you've decided without looking and understanding at the right, without looking at the market and understanding it. That should be something that you've decided once you've come to understand the market, right? For example, for example, as the market starts to trend and hit new highs, I become the person that sits on his hands more often, that only buys the anomalies, the stocks that fall off the tree as it grows, right? As the market starts to approach what seems to be the forming of a peak of the trend, I become the person that starts to shave off some of those gains and starts to say, yeah, I'm willing to let's let's okay, I'm up here, let's put that in cash. I'm up here, let's put that in cash. Like taking those profits, right? But I'm also the person that even if I thought the market was going to drop 50%, I'm also the person that's not going to take that equity out of the market, right? Take those profits, I'm going to set them aside. I'm the guy that when the market's up there, even though I won't take the equity out of my strongest companies, if I'm done with a company, I'm done with them. I will get rid of them and I will invest that money into something stronger, right? If I feel like a company that I own is starting to get weaker, right? What do? I replace them with somebody that's doing better, right? I replace them with somebody that's doing better, or somebody that a company that I perceive will do better, right? I'm the guy that if If I perceive that that moment is coming when the market is coming down, right, I'll pick up some long volatility positions or maybe even short the market to mitigate some of those potential losses. I'm the guy that before the market even started to fall, I've already said I'm willing to buy here, here, here. And when we hit those levels, I do exactly that. We hit the first level, I buy cautiously. We hit the second level, I buy more aggressively. I always have a worst case scenario in mind where, sure, I'll continue to purchase if we hit these levels. I'm that guy. Again, that will tell you what I'm going to do ahead of time. And when the time comes, you're going to watch me get it done. I'm going to get it done. That's not going to change. Right? Where are we going to buy next? If the market breaks 4,646. But we're at what we believe may be a momentary low. So the market may start to bounce from here. Look, why are we collapsing? The European Union just added more tariffs, right? Why aren't we collapsing? I'm not telling you that the I'm not telling you that the how do I put it? I'm not telling you that the market will not respond to this at all, right? Just 1 second, guys. Shout out to Glenn 7575 for the follow. Appreciate it. But yeah, as I was saying, right? So we appear to be in one of those moments right now where it could be a just a momentary stalling, right? So again, my challenge to you guys is really pay attention to how the market responds by the end of the day. Do we actually close to the downside? Though these are things that we don't want to pay attention to, right? Now, we got a VIX again. That's still look at this, right? Almost 4 standard deviations off the average level of the VIX. We got an RSI that hit below 20 today. You know, and still gave us a technical divergence. And still gave us a technical divergence. That's crazy. Right? So which guy am I in this moment? I just explained it to you. Right? I'm the guy that's going to sit on his hands more often. Right? I'm the guy that's going to sit on his hands more often and only buy when the anomalies happen, when things fall off that tree that's growing. Right? I'm the guy that as we rise more and more and more, right, I can start to shave off some of those gains and set them aside and prepare for more opportunities later on down the line. Nothing is going to change about that guy. I promise you that. Nothing's going to change about that guy. I don't care if the fear and greed index went to a negative 100. I promise you, everything I'm going to do is going to be consistent. Right? Everything I do is going to be consistent. So to fair and greed real quick. Right? We're still at a 4. We hit 3. We hit 3. We closed at a 3 yesterday. We're still at a 4. See this right here? The further we are from the 125-day average, the further we are from the 125-day average, that all that stuff right there, right? Historically, you have some gains ahead of you. I'm not telling you these gains will last forever. I'm not telling you this is going to be a new bull market. Okay? I am not telling you that. But what I am saying is, right? What I tell you guys earlier, if you're gonna be the person that's shorting, right? Take your shorts and get out the way. Take your shorts and get out the way. All right? Come on at these levels down here. All right? At these levels down here, get your shorts in and get out the way. All right? Let's not put ourselves in any positions where let's not put ourselves in any positions where we're trying to swing puts. All right? Don't get me wrong. If you want to swing, when I say okay, let me rephrase that. Let's say you want to swing a put overnight or something like that. I think that's better. But you know, the idea that anybody thinks, you know, yeah, I think I'm gonna swing some puts in the next week or something like that. Don't kid yourself right now. Don't do it. Don't do that to yourself. All right. And I'm gonna tell y'all one thing right now, just in case y'all don't see me on Friday. Right. But I'm sure I'll be here. But I usually have an early morning session. So this Friday I'll be here because I think my early morning session is canceled this Friday. But just in case y'all don't see me on Friday, let me tell y'all right now. All right. If we do see more downside right now, we start pushing towards certain levels to the downside. I repeat, I'm gonna do not swing puts over the weekend, folks. Don't be that person. All right. Remember what I said. So consistency is key. Told you I'm consistent in my messages. I told you I would tell you what I'm going to do ahead of time, and that's what I'm going to be. I'm going to be that guy. All right. Do not swing puts over the weekend if you're falling into Friday. That's basically what I'm saying to y'all. Right now, if you rallied into Friday, let's say you rallied into Friday, pushed up towards these levels, and you want to take some puts over the weekend, handle your business. Handle your business. That's different. That is different. All right. Um, before we close out, before we go anywhere, I just want to say I appreciate everybody. I thank you guys for you know getting us built up so quickly. We built up really quickly once we got this thing rolling. All right. I just got the email from which they're inviting us to the affiliate program. Okay. Just got the message. So they're inviting us to the affiliate program. So, you know, that was the next step, right? So once we could do that, now we can start to, dig into some other things. So, here we go. All right. We got that done. We got it done quickly. Way ahead of schedule, right? the goal was to get there by the end of the month. It's only the 9th. It's only the 9th. Appreciate it, guys. Thank you, Kenneth. Thank you, thank you, thank you. So yeah, man. So for today, if it's okay if you're still looking for short opportunities on the day, all right. But please be mindful, right? Please be mindful that we're at a point where that shift to the downside, right, has just been overplayed, as they stated earlier. It's been overplayed. All right, now let's talk about, from a technical perspective, what can we look out for? All right, what can we look out for from a technical perspective? Number one, um, if and I'll repeat. So I have my value area set to 45. Right, if we close to the high end of this value area, all right. If we close to the high end of this value area, to the outside, right, side here. So let's call it, as of right now, let's call it above 505. So if we close 505 or higher, right? Actually, 504 actually, right? Yeah, 504 or higher. If we close at 504 or higher, right? Let's consider that an opportunity to go long into tomorrow. Thanks, Algin. Appreciate it, man. Much appreciated, man. You know, we got to start getting some of our people, more of our people, tapped in. Um, we recognize that this isn't going to be for everybody, but for those that could benefit, maybe they are interested. It's not a bad idea, right? So yeah, so if we close outside of this value area to the upside, and let me show you guys how to place this. And let me delete this so I can show you guys how to place this, right? So I have my value area set from a weekly, right? So I have it set on Monday right now. So over here on TradingView, right here where you set your long positions at, right? Or where you set your positional set at. There's your anchored volume profile right here. I have this one set to Monday. I have it set to Monday. You just kind of place it there and you go. Now, as far as like from a daily perspective is concerned, you can also place it here for the day. And as you can see, it's been a very, very big concentration of volume right here at the, at this portion right here. So for right now, we're definitely on the bearish side of things at the moment. Right? See that? Look at that. Boom. All right. So these are potential short opportunities every time you see these right here. This one in specific presents a reasonable short opportunity, but you can see how we keep rising back to that value area high. You know, but in the end, I do think it's okay that we're looking for some short opportunities today. If you're doing so, all right, get your money, get out the way. All right. Now, I'm gonna leave this one here. I'm gonna leave this for the day here, the daily here. All right. So, so in this particular case, you would say if we close above 500, right? Close above 500 at the moment, then we are most certainly we are most certainly we got the go ahead to take longs into tomorrow. But if you close below the value area low, as of right now, which seems to be about 497 ish, right? Close below 497, it'll be okay to take some shorts into tomorrow. However, I would be more cautious about taking the short into tomorrow than taking the long into tomorrow. So what I would suggest is, debit spreads for your shorts. Debit spreads for your shorts if you're gonna take them. Don't be greedy. Don't be greedy. Cap the potential gain. That way you limit your potential loss. Simple. Real simple stuff. Right? That would be my thought process there. Now, I just want to point out that as of right now, we do have a higher low on the day here. Right? That's still set. Right here. That's still set from yesterday. So we haven't broken yesterday's lows yet. So that's the question of what's happening right here. Will this break today's lows? That's a big question for us. But nonetheless, I think the big thing I'm going to be paying attention to is pay attention to the Dow Jones. If we close down and the Dow Jones does not close down more than 200 points, then it wasn't really much to see there, right? Look for the Dow to close down more than 200 points in order to really see that thing, ring home. As far as those new tariffs coming from the European Union. All right. But for right now, I mean, as you can see, futures are still holding as of right now. They never broke the 50 MA. This is actually a strong sign that they couldn't actually hit the 50 MA. That's actually a pretty strong sign right there. If you ask me. Maybe I'm wrong. Maybe I'm wrong. All right. But for right now, you got yourself a little move happening here. Maybe look to revisit the lows. So that's about a $4 move right there. It's about a $4 move right there. For you, or maybe a $5 move if you want to take the position. Well, um, that's it for the day. So remember, I closed above the value area high today. You can look to take some longs into tomorrow. I close outside of the value area low. Take some shorts, but take the debit spread approach, right? That way you can mitigate some of those. You can mitigate some of those potential um, losses, because right now this market, in my opinion, you know how I heard it described yesterday, that this stock market right now is a tightly coiled spring. That's a great way to put it. It is a tightly coiled spring that we just keep twisting, twisting, and twisting. Right? When that release happens, right? That release happens, right? You see that? This was a 30-minute period right here. This was only 30 minutes. From a low of 482.51 to a high of 517. From 482 to 517 in 30 minutes, right? And what had to be less than 40 minutes, from 482 to 523. Okay. See this? Look at this. Just canceling out. Just canceling out. Like I said, I can't blame somebody if they're looking for short opportunities. I can't blame them. But this market, man, right? A tightly coiled spring. We're gonna start using that one, Anisha. I like that one. I can't remember who said it. I wish I could give him credit, but I like that one. A tightly coiled spring. Pretty much, pretty much, pretty much. But in reality, Mobiza, I think one other important thing here um, is also the potential of what all that talking could mean, right? If it's just talk, if it's all talk, in the end, we'll rebound nicely and we'll forget this ever happened, right? But if there's bite to that bark, if there is bite to that bark, if these tariffs remain in place over the long term, let me show y'all something real quick. See this? Right? We're minus 2.4%. We started here, February 2nd. We started here. So, and so that's actually crazy, right? So around the time when we released that warning to the market, we were here. Look, February 5th. We were here when we released that warning. I'm not gonna say nobody saw it coming. We couldn't have been the only ones. But hey, look where we are now. Look at where we are now. They got a gold adjusted GDP now here at the moment. Um, I guess because we talked about this. If inflation sticks around, these businesses are gonna start to pass a lot of that off, man. They're gonna start to pass a lot of that off. All right. Um. Anyways, I will catch up with you guys over on Clubhouse in a few. All right. Everybody be blessed. Stay well, and I will talk to you soon. Later. Got you, Aldrin. Those storage facilities being updated, upgraded. All right, y'all.